Welcome to the Deep Dive. Today, we're looking at this huge, complex thing, the global financial system. And right at its heart, for decades, has been the US dollar.
It really has an enduring presence.
But now, we've got these two massive, fast-moving forces hitting the scene: artificial intelligence, AI, and the whole world of digital currencies, especially things like CBDCs, central bank digital currencies.
And they're making things, well, incredibly interesting and complex.
Absolutely. So the big question we're tackling today, based on the source material you've brought, is this: can AI and these new digital currencies actually challenge the dollar's dominance? Specifically, thinking really near term, like by 2025.
And the sources, right off the bat, give us a pretty clear steer. It's not about some imminent, dramatic dethroning. AI is definitely a powerful force. Digital currencies are disruptive, yes.
But not a 2025 collapse.
Exactly. The material suggests that's just improbable. But, and this is the key insight, AI isn't just tweaking the old system. It's actually accelerating these underlying currents, these trends that could, chip away at dollar dominance over a longer horizon.
Okay, so less revolution, more like AI hitting the accelerator on evolution.
That's a good way to put it. And the sources really hammer home that the different paths being taken by the big players, the US, China, the EU, their strategies are critical here.
Their approaches to AI and digital money are shaping what comes next.
Fundamentally, it's creating the landscape for global finance's future.
So with all this complexity, what does it actually mean for you, trying to follow these massive shifts? Let's unpack what the source material tells us.
Right, let's start with the basics. Where is the dollar right now? Well, undeniably, it's still the world's primary reserve currency.
Yeah, and the numbers back that up. The sources point to the IMS data for the end of 2024, the COFER data. Dollar's share of allocated global reserves, 57.80%.
Which was actually up slightly from the previous quarter, Q3's 57.30%.
Although, interestingly, total reserves actually dipped a bit in that period, from about $12.75 trillion down to $12.36 trillion.
And just for context, the euro was sitting at 19.83% in Q4, and China's renminbi, still quite small, relatively speaking, at 2.18%. So the dollar's lead is significant.
But here's where it gets nuanced, and the sources really flag this. That slight increase in the dollar's Q4 share, it wasn't necessarily central banks rushing out to buy more dollars.
No, a big part of it was what they call the valuation effect. Basically, the dollar got stronger against other major currencies, so automatically the dollar assets they already held were worth more relative to the total pot.
So it looked bigger in the pie, even without active buying. That's crucial not to misread.
Absolutely critical. And the traditional pillars holding the dollar up, they're still largely there, according to the material. The deep, liquid U.S. capital markets, the sheer size of the U.S. economy, its role in trade invoicing, commodity pricing.
Or full inertia.
Huge inertia. But the sources do flag some, let's call them, emerging strains. Things like worries about U.S. government debt, fiscal policy. Those are mentioned.
And then there was that odd market behavior noted in early 2025. What was that about?
Yes, that's quite interesting. So normally, if yields on long-term U.S. government bonds go up, you'd expect that to attract foreign money, strengthening the dollar, right?
Standard playbook.
But early in 2025, the sources observed something different. Higher U.S. long bond yields happening at the same time as a weaker dollar.
That's counterintuitive. What could that mean?
Well, the potential implication, as the sources suggest, is that maybe, just maybe, foreign investors are starting to demand a bit more compensation, a higher risk premium for holding U.S. debt.
So, a subtle shift in perception about U.S. risk.
Could be. Not a crisis, but perhaps an early tremor, a signal that some are rethinking things. It's the kind of data point you'd watch if you were considering, say, diversifying your reserve.
Which brings us neatly to the first big disruptor, AI's role in finance. It's not sci-fi anymore, it's here and now.
Oh, absolutely. AI is weaving itself into the fabric of the financial system. We're not just talking simple automation, we're talking new ways to invest, completely new ways to manage risk.
Applications everywhere.
Pretty much. Cross-border payments, making them faster, more secure, managing foreign exchange risk, compliance, huge area. Fraud detection AI is making massive inroads there.
And the potential economic impact numbers are pretty staggering. The WEF suggesting AI could lift global GDP by maybe 7% over a decade.
Yeah, and McKinsey's estimate, just for generative AI in banking, think $200 to $340 billion annually. That's enormous potential value.
Do the sources give concrete examples?
They do. Look at JP Morgan's Koyan platform. It uses AI, reportedly analyzes something like 12,000 commercial credit agreements in mere seconds.
Seconds. Versus how long before?
Thousands of human hours, apparently. That's a transformative efficiency gain.
Wow. Okay. Any others?
HSBC's dynamic risk assessment, also AI-powered. The sources say it boosted identification of suspicious financial activity by 2 to 4 times. And crucially, it cut down the false alarms, the false positives, by 60%.
So better security, less wasted effort? That's tangible.
Very tangible. And AI is shaping investment flows, too. We've seen this boom in AI-themed ETFs.
Right, the exchange-traded fund.
Exactly. Robotics and AI ETFs pulled in, what was it, $1.1 billion in just Q1 of 2025. The sources mentioned tickers like AI, WTAI, AIQ.
And AIQ had some decent performance numbers cited.
Yeah, for AIQ, a one-year NAV performance, that's net asset value per share of 7.11% as of late March 2025. And looking back from late 2024, its average 5-year return was hovering around 18%. Shows investors want a piece of the AI action.
But it's not all upside, is it? AI brings risks, too.
Definitely, especially as it gets deeper into things like high-frequency trading, HFT.
Yeah.
The sources mentioned the Bank of England's warnings about herding.
Herding, like all the algorithms doing the same thing at once.
Precisely. If multiple AI systems may be trained on similar data, all react the same way to a market shock, they can massively amplify price swings. Suddenly, liquidity can just vanish.
Leading to flash crashes.
It can contribute, yes. Under normal conditions, AI-driven HFT often adds liquidity and makes markets more efficient. But under stress, that synchronized selling can cause sudden, sharp drops.
And what about relying on just a few big AI providers?
That's another key risk flag, systemic risk concentration. If everyone's using AI models from, say, 2 or 3 big companies, what happens if there's a flaw, a bias, a successful cyber attack?
It could ripple through the whole system.
Exactly. It becomes a single point of failure, potentially. So huge potential, but also new vulnerabilities to manage.
Okay, so AI is this powerful, double-edged sword reshaping finance. Now, how does this connect with the other big trend of the global race in digital currencies, specifically CBDCs?
Well, that CBDC race is really heating up. The sources state 134 jurisdictions were looking into them by early 2025.
134. That's most of the world.
Pretty much exploring it in some capacity. Now, actual retail CBDCs, the kind you and I might use daily, those are still quite limited. But the work on wholesale CBDCs for banks to settle payments between themselves, that's moving much faster.
And China's ECNY is way out front, right?
Truly a front runner, yes. The scale described in the sources is impressive. By mid-2024, operational in 29 cities, pilots in 17 provinces, processing transactions worth over 7 trillion yuan.
Which is nearly $1 trillion US.
Roughly, yeah. And structurally, it's a retail CBDC, pegged 1-to-1 with the physical yuan, functioning like cash in circulation, what economists call M0.
What's China's strategic game here?
Couple things. Domestically, it seems aimed at reducing the power of the big private payment firms like Alipay, WeChat Pay. Internationally, it's definitely a tool to try and boost the renminbi's global footprint.
Which is still pretty small in global payments.
Around 2.8% via SWIFT in 2024, according to the sources, so lots of room to grow. And they're actively pushing cross-border use.
Like in commodity trading.
Yes, testing it there. Partnerships with the UAE. The sources noted that 12% of China's oil imports were settled in RMB in early 2025. That's a significant jump from just 2% back in 2020.
But there are concerns, too.
Yes, the sources consistently mention the surveillance aspect. The potential for the state to have much greater visibility into individual transactions is a recurring theme.
Okay, moving beyond just China's domestic project, what about Project mBridge? That sounds important for cross-border payments.
Hugely important. It's a collaborative platform facilitated by the BIS Innovation Hub, that's the Bank for International Settlements. It connects the central banks of China, Hong Kong, Thailand, the UAE, and now Saudi Arabia, too.
Using multiple CBDCs on one platform.
Exactly. The goal is direct central bank to central bank settlement for cross-border payments. Faster, cheaper, more transparent, cutting out many of the intermediaries in the current system.
And the pilot results mentioned in the sources sound, well, pretty dramatic.
They really do. $22 billion processed in 2023 pilots, jumping to $50 billion in 2024, settlement times under 10 seconds, and cost reductions of up to 98% compared to traditional correspondent banking.
98%, wow.
Yeah. Projections mentioned suggest it might handle $500 billion annually by 2025, and they're looking at expanding it, maybe 15 countries involved soon, with others observing.
So mBridge is a practical step towards building payment systems outside the traditional dollar network.
It certainly looks like a very tangible effort to create alternative rails, yes, which could, over time, reduce reliance on the dollar system for certain types of transactions.
Meanwhile, what's happening in Europe with the digital euro?
The EU is moving forward, but maybe more deliberately. They entered the preparation phase in late 2023, targeting a potential launch around October 2025.
What's their vision for it?
They frame it as a complement to cash, emphasizing privacy and offline usability. But a really big driver, stated explicitly, is monetary sovereignty.
Wanting control over their own payment infrastructure.
Precisely. The sources note that something like 65% of Euro card payments are processed by non-European companies, mainly Visa and MasterCard. A digital euro is seen as a way to ensure a European-controlled alternative exists for the digital age.
Any design details?
Ideas being floated include holding limits maybe around 3,000 euros per person, and it wouldn't pay interest. The idea is to make it a tool for payments, not savings, so it doesn't destabilize commercial banks. It's also positioned as a hedge against geopolitical uncertainty.
Okay, so China pushing hard, Europe moving deliberately towards sovereignty. How does the U.S. approach to a digital dollar compare?
It's starkly different.
Right.
The U.S. position described in the sources is much more cautious, bordering on prohibitive right now.
Prohibitive.
Yes. The key thing mentioned is Executive Order 14178 from January 2025. It explicitly banned federal agencies from establishing, issuing, or even promoting a U.S. CBDC. It actually terminated existing exploration plans.
So a full stop from the government.
Pretty much, for now. This followed a 2022 Fed report that just kind of outlined possibilities but didn't take a stance. Private groups like the Digital Dollar Project are still researching, but the official path is blocked.
What's the consequence of the U.S. stepping back like that?
Well, the sources suggest it creates a clear opening. While the U.S. deliberates or prohibits, others like China with the ECNY and platforms like mBridge have a window to gain ground, build networks, and potentially lock in users and standards, especially if AI makes their offerings even better.
Right, let's connect those dots. How does AI actually make these CBDCs or platforms like mBridge more powerful?
AI can supercharge them in several ways. Think about automatically handling currency conversions in real time for cross-border payments, complex stuff made seamless.
Okay.
Or much smarter fraud detection than old rule-based systems, optimizing payment routing, finding the cheapest, fastest path instantly. Even using AI for market forecasting related to CBDC flows, or generative AI to model how people might adopt them.
And the sources mentioned programmability. What's that about?
Programmability. This is potentially a game changer, and the sources note China's ECNY has this capability. It means you can embed rules directly into the money itself. Like funds could be designated only for specific purchases, say welfare payments, only usable for groceries. Or transactions could be restricted between certain parties.
That sounds powerful with big implications for control.
Exactly. Domestically, it offers new policy tools. Internationally, a major power using programmable money and trade could attach conditions, potentially shifting dynamics away from purely market interactions.
Which links back to those surveillance concerns you mentioned earlier.
It certainly adds another layer. Programmability is powerful, but it raises significant questions about privacy and control. And there's another tension the sources bring up.
Go on.
CBDCs, like the digital euro, aim for monetary sovereignty, right? Less reliance on foreign payment tech. But building and running these complex digital currency systems, especially with advanced AI, who provides that underlying tech?
If it relies on a few global AI or cloud providers?
You might just be swapping one form of dependency for another, aiming for sovereignty, but potentially creating new technological dependencies. It's a real paradox they need to navigate.
Definitely something to watch.
Okay.
Let's zoom out again. We've got these distinct CBDC paths. How do they fit into the wider strategic competition in AI and the digital economy between the U.S., China, and the EU?
It's all deeply interconnected.
Yeah.
The U.S. strategy, as laid out in the sources, really leans on its private sector dynamism to maintain global AI leadership. It's about competitiveness, national security.
That Executive Order 14179, removing barriers to American leadership in AI, seems key there.
Yes, aiming to cut red tape for innovation, favoring AI free from ideological bias, as it says. And there's massive investment, like that huge private Stargate project mentioned, $500 billion planned for U.S.-based AI infrastructure explicitly to keep the tech onshore.
$500 billion.
Yeah, it's a huge figure. Overall, U.S. AI investment projected for 2025 is over $470 billion, leading the world by a wide margin in funding.
And policy is shaping the digital space beyond just funding.
For sure. Laws proposed around AI and security, workforce impacts, supply chains, fraud. Export controls via the Commerce Department's entity list, restricting tech access for foreign militaries. And those new Treasury rules for crypto brokers reporting transactions from January 1st, 2025.
So summing up, the U.S. turbocharged private AI, control sensitive exports, but slam the brakes on a public digital dollar. It's a bet on private innovation winning out.
It seems that way. China's approach, though, is quite different, much more top-down, state-directed. It all ties into their Made in China 2025 blueprint.
Aiming for global leadership in key tech sectors, AI being central.
Exactly, with a huge emphasis on self-sufficiency, supported by the next-generation AI development plan to push AI into every corner of the economy.
And the funding is massive there, too.
Over $1.5 trillion earmarked for MSE 2025 R&D, buying companies, building infrastructure. Total estimated AI investment for 2025 is around $119 billion, second globally. Their model is state funding, clear directives, and leveraging huge domestic data sets.
And we see the outputs, AI chatbots, progress in EVs, drones, and the ECNY.
Yes, the ECNY is a core part of this integrated strategy. China is connecting the dots. AI development, digital currency rollout, international projects like Belt and Road and mBridge. It feels like a very holistic, long-term play linking tech, finance, and geopolitics.
Aiming to reshape the global order.
That certainly seems to be the ambition described.
Okay, what about the EU? You called it a third way earlier.
That's the framing in the sources. Their AI Continent Action Plan from April 2025 focuses on boosting AI use, but with a strong emphasis on trustworthy AI and digital sovereignty. They're mobilizing funds, too, $200 billion via Invest AI.
And they have big infrastructure goals, AI factories and such.
Yeah, plans for 13 AI factories, 5 bigger AI gigafactories, $20 billion set aside just for processors, a proposed Cloud and AI Development Act. They want to build up their own digital backbone, though major non-EU tech firms are also expanding there.
And they're focused on data strategy and regulation.
Yes, creating a single market for data, integrating AI, skills development, and of course the big one, the EU AI Act, setting global precedents for regulation. This runs alongside the Digital Euro project, again, driven by that sovereignty goal.
What's the challenge for the EU?
The challenge highlighted is turning plans and regulations into world-leading innovation and infrastructure quickly enough. There's a risk noted, becoming the most regulated market, but perhaps lagging competitively behind the US and China if investment and breakthroughs don't follow. And that reliance on external tech providers remains a tension.
So 3 distinct strategies playing out. Now let's bring it all together. Given the dollar's position, AI's impact, the CBDC race, these strategies, what are the plausible futures for the dollar? The sources outline some scenarios.
Yes, they sketched out 3 main possibilities based on how these forces interact.
Scenario 1 was continued dollar resilience.
Right. Basically, the dollar stays firmly on top. AI gets integrated, makes the existing dollar system work even better, smoother payments, smarter risk management. CBDCs, like the ECNY or digital euro, exist, but they stay pretty niche, mainly domestic perhaps. US AI leadership, strong alliances, stable geopolitics all reinforce the status quo.
Okay. Then scenario 2, fragmentation and a multipolar landscape.
This is where things shift more noticeably. Dollar dominance erodes, though it probably remains the most important currency. But you see distinct regional currency blocks emerge, powered by CBDCs and alternative networks like an expanded mBridge.
So the ECNY gains real traction in certain regions or trades. Digital euro boosts the euro's role.
Exactly. And a key element here is AI tools making it much easier to handle multiple currencies seamlessly, reducing the old friction that pushed everyone towards using just one main currency. U.S. caution on a digital dollar, maybe coupled with ongoing fiscal concerns, pushes others to actively diversify.
And the most radical one, scenario 3, a new financial order.
This envisages a really fundamental shift. Maybe AI native systems like highly efficient DeFi platforms or sophisticated AI managing multi-CBDC networks. start to coexist with or even compete directly with traditional finance. The whole concept of reserve assets might change. The dollar's role would be significantly reduced.
That sounds like it requires huge leaps in tech and trust.
Absolutely. Major AI breakthroughs, widespread global adoption of these new systems, big geopolitical realignments. It's the most transformative and likely furthest out scenario.
And the sources stress that AI isn't just a static element in these scenarios. It can actually drive the shift between them.
Precisely. AI is the catalyst. For instance, if AI development makes something like mBridge incredibly efficient and secure very quickly, that could rapidly accelerate the move towards fragmentation, towards scenario 2.
But it could cut the other way, too.
It could. If AI inadvertently causes major market meltdowns or reveals significant security flaws in these new digital systems, you could see a flight back to the perceived safety and predictability of the existing dollar system, reinforcing scenario 1, at least for a while.
So looking at where things stood in early 2025, we had a bridge making progress, EU pushing its digital euro, the US hitting pause on a digital dollar. Which path seemed most likely in the medium term, according to the material?
Based on those specific trends visible then, the sources suggest that a gradual drift towards greater fragmentation towards scenario 2, a more multipolar currency world, looked more plausible in the medium term than either a sudden leap to scenario 3 or scenario 1 holding indefinitely.
Okay, so wrapping this up, the key takeaway for you listening is that 2025 isn't the year the dollar is expected to fall off its perch, but it's clearly a pivotal moment.
A real inflection point where these powerful forces, AI and digital currencies, are becoming much less theoretical and starting to visibly shape the future of money.
And the direction seems to be towards a financial system that's more complex, more technologically driven, maybe more fragmented, definitely more multipolar than what we've been used to.
That seems to be the trajectory, driven by everything we've discussed. The dollar's strengths and weaknesses, AI's pervasive impact and risks, and especially those diverging national strategies on digital currency and AI development.
That contrast between the U.S. essentially saying no to a public digital dollar for now, and China actively building and promoting the ECNY and platforms like mBridge really stands out as a key dynamic.
It's a central tension highlighted in the material, absolutely.
So the ultimate question the sources leave us pondering isn't just a technical one, can AI challenge the dollar? It goes deeper.
It's about choices and execution. Will the countries and groups developing these AI tools and digital currencies choose to build genuine alternatives? And maybe more importantly, will they succeed in making them trusted, efficient, and widely adopted enough to truly compete with the dollar's massive incumbency advantages?
Because the tech might move fast.
Incredibly fast. But the bedrock of global finance, things like trust, network effects, institutions, just sheer geopolitical inertia, those tend to change much, much more slowly.
2025 gives us strong signals, important clues, but the full narrative is still being written.
Absolutely. Lots to keep watching.
Definitely. Keep thinking about how these powerful currents might reshape the financial world around you.